how low the market has gone. You have seen many punters out there been talking about it. Wow, this is really bad. I thought 2008 was bad, but this was even worse off. So how can you make sense of it? Right? What does it all mean? Does this mean you go in and buy? So we're going to look at those facts inside and present to you. Definitely for sure, we're going to go for is to get our update. Okay, go to TradeVSA Telegram group. If you're first time listening in here, type 1. I really appreciate that. So I know who are you talking about. If you're really the first time, just type 1 there, and then join our Telegram TradeVSA group, so you'll be updated. Not so much because this live FB is only once a week, but on a daily basis I will update you on what's happening to the market, so you will stay updated and not fall into low. That's a lot of information out there. There's a lot of information in the newspaper, media, Facebook, but I want you to be updated the right way based on our TradeVSA track record, our analytics, and the experience that I had over the last 15 years to able to guide you through. My last experience in 2008 and 2009 market crash, how we can go through this together. I think that's very important, right? We want to go through this together. So join the TradeVSA Telegram group. And in addition, also do subscribe to our YouTube channel and not to be missed on the important topics on the stock market that is ongoing. We did talk about the national, Malaysian National Fiberization Project. We talk about the post-budget. We talk about the Sharia goal, and we also talk about Smart Robie, how using our TradeVSA apps, Smart Robie, targeted for the new millennium, where it give you stocks trading ideas as well as fundamental and buy and sell signal all in one in your mobile handphone. Just go to our fb.com/smartrobie. You can see right below in there, so not to be missed. Okay, now let's go on to what we know so far, right? 3 known facts. Thank you for coming, guys. Okay, so do share this out. What we have seen that we have more than 700 companies which really dropped below 100 million, which is not much, about 450 million. So what they are saying that a lot of large cap has become medium cap, a lot of the medium cap has become small cap. That is what we have seen so far in the fact number 1. Okay, so let me just type, this is the fact number 1 in here. All right, so you can see a lot of shares. So what does this mean? That means there is a lot of buying opportunity. Okay, there's a lot of buying opportunity. That is definitely a fact. So what is ongoing is also our COVID-19, and I think I will also post it on Facebook. Fact number 2, there are a lot of healthcare out there really slugging it out. The doctors have been called back and retired. You can read all this, all that. They are going out to help, and also the governments are coming in and asking people to stay at home, or stay home, right, and stay away from hospital. Okay, hospital. So you can see those are really some of the signs, and let the healthcare. And this morning, you all know there's another casualty, 16. I don't have to tell you that, but very important. I'm going to go on to the facts. Some of you may know is what we call flatten the fact. And point number 3, which is also important, is this point here. So the Bank Negara and also the Perikatan Nasional new government are really doing, new government, let me just write it here, are doing what is best, to really, short off the stock market. But there are a couple of known facts which I'm going to share with you here, is that they are talking about 6-month automatic moratorium, which means you can delay, your payment, but that is going to have an impact to the banks. Okay, an impact to the banks, and bank stocks are not really one of the things you want to look at it, in my opinion, because also there will be a likely of also if they don't do that, there may be non-performing loans to non-performing loans. Okay, NPL, which is also will creep up to as it goes higher, because more people out of jobs, and then so it is all what we call a really double whammy coming in here. So no fact. And let's look at fact number 4. Right now, this is updated on the 23rd of March. You can see this whole big chunk here. What does that tell you? Okay, this is actually coming from our TradeVSA package tools. Okay, TradeVSA, our premium products, premium dashboard. All right, you can find out more from the information below, and then you could really see on the 23rd March here, right? Foreign funds are still, really continue to outflow. That's the key point. And you can see the KLCI continue to go down. Not likely. You can see what happens. They sell less. Okay, this thing is creeping up. So when they sell less, that means the market is recovering. A lot of foreign funds, you notice, way back in February. All right, you can see February 19. These guys are already start selling right now. So the question is, when will this bleeding stop? I think it will take some time. Definitely take some time. The market will recover. Will it go back to the old high? I'm going to share with you 4 cases, and some of you may have seen the slide I posted on Facebook and also on our Telegram. The 4 scenario or the 4 scene that we have seen way back in 2008 and right now to 2020, what has happened. So I'm going to bring you down and really show you those information in here that you can really take note of it and prepare yourself. Very important. When the market do rebound, what are the stocks you want to look at? What are sectors you want to look at? What are the things that you want to look at? And also get your tools ready. Yesterday I got a call from a friend, who have never invested in the market before. I can also understand, and he said, no, I want to buy some stocks. I said, have you opened up an account? So no, I've never invested in the stock market. But why prompt you to invest right now? Because the market is deep. I think that's really the issue now. Many people like you and me are seeing opportunity they have never seen before. That is why I want to talk about the stocks also here today, right? So what are the stocks that you want to be looking at? So we're going to share you one way and one method to actually go into it and have a regular engagement with the kind of stocks that you want, when to buy and when to sell. Am I correct for that one? Okay. So this is why it's important that you all understand the foreign funds which is flowing out there. Thanks guys for doing that. I'm just going to present you the facts that is important. Not so much is looking at the stocks. I think it's also good to know the macroeconomic that is coming in, that is sharing with you. Right now, those 4 facts, right, does not look very, very good for our Malaysian market. For a start, these foreign funds continue to outflows. Okay. If you have any question, do put it in there. I'm very glad to help you too. Okay, right now, the next fact I think some of you may have also known, right, is the ringgit to US dollar. We have lost, my God, this is almost 10%. Okay, so we actually lost 10% of our value since January 2020. You could see this over the base here, and right now about 9.8%. So going forward, which also I have been already telling many of our members and many of our my clients are okay because I already moved them the last 2 to 3 years to the US market. So that's why it's important that many of you listening for the first time, don't look at, just the Malaysian KLC market. Look at the overall market, what you see. Look at the US market, like Netflix, Amazon, Facebook, Microsoft, Alibaba. These are the stocks that you hear every day. Now, my question is asking, are you invested in it? Some people might say, wow, it's so expensive over there, right? I like to buy penny stocks. But there are certain risk implications as you begin to increase. This is what I talk about, the financial literacy, which really a problem in Malaysia, which I see a lot. That's why we are doing our educational program. You could see the next one that we're doing are March 29 and 30th, where we educate people on different instruments that can take advantage. So this kind of education that we provide, plus the live FB that we've shown, will generally help people, right, to understand financial literacy is important. Don't people tell you and you want to go and buy. People say, I don't know about stock market. Just tell me 2 stocks I want to buy, right? Generally, my answer to you is very simple. Just buy public bank, okay? Some of my clients, they say they don't know much, so I'm beginning initiating buying public bank, not at this price. Currently, I think it's doing around $16, perhaps a bit pulling back on the low side. But very important, my message is, just like what Robie said, moving forward, it's good to diversify outside of your ringgit. Okay, outside your ringgit, and those people who healed early on probably bought it around 410 to US dollar and then going up. Now, think for yourself, right? How many do you think our ringgit will lose some more going forward, right? When you see more jobs out there, what do you think? So type it in there, you'll see the ringgit weakening. Just type MYR weaken, and I really know that some of you really understand what I'm talking about, why it is important to diversify of ringgit-based investment, perhaps the US market or Singapore market too. But having said that, right now, just take note of what we've seen so far. All right, guys. Now, next also the breakdown of the COVID-19. I think this is quite important where we are. This is, I think, some of you may have seen it on the media. This is where Malaysia is. Let me just circle this for you here. That's where Malaysia is. Right, so I hate to say this. This is the sort of the catch up that all of us need to do. Okay, the catch up and what we call the late accumulation. So this is a part where very scary. Now if I look at the news, I've just had it behind here. I think we are 1,500 to 1,600. Am I right? Give and take. Then you have 16 deaths right now. All right, so that's always about 1% mortality rate. Okay. So the next slide is what we always talk about, flatten the curve. So how bad can we get? So we are already in the 7 days, okay? So I think so, right? Today is Wednesday. Or the MCO order. We got one more week, okay? One more week to MCO end. Okay, so the question is, if we continue to go up here from 1600s, right up to let's say 2500, and that's what is very important. Where earlier I talked about fact number 2: stay at home, stay at home, stay at home. This morning I went in and do the market. I'm quite happy to see in the market there are not too many people that go. I don't go to crowded places, and I always bring a face mask and I bring a sanitizer. It's just basic things you need to do to protect yourself. And when you come back, do a shower and throw away all your clothes to the laundry and get it washed. I think that's right to do a practice, because whole point is to flatten this curve. So if our numbers, okay, increase from 1600 to 2005, then I see there is possibly another 1 week extension. Okay, extension to the MCO. Hopefully it's not, as you can see, China is dipping down. Very important, this number, if we go up here, hopefully we want to see this. This is what I like to see. Okay, the dip in the number not going up. I don't want to be a COVID-19 expert, but one of the things that we need to know is the rate of people getting infected. That will tell you how soon we get out from the stock market and all. So that's what we talk about in the next slide, which is flattening the curve. I think many of you would have seen this chart in here. This simply says where we are, because many countries are going through this. This is like Italy, okay? This is also Spain, okay, France, all right? And trying to getting out is UK. UK has already launched the lockdown in here because they want to what we call flatten the curve, flatten the COVID curve. And this is where the healthcare is. Right now for our Malaysian healthcare, I think some of you read we have about 3,000 beds. This is our ICU beds. And then they're ordering some more ventilators, they're buying from more China, so we're buying another $10 million masks in here. And this is a part that actually came out by JP Morgan, okay, and also MOH, where this is the number of infected case. We are around here, okay, the number of days, and this is a part we have to do. So if we can flatten the curve, I said maybe we hit 2005. Oh, okay, sorry about that. Okay, we hit 2005 here, right? Then we are able to do this. Okay, this is our hospital capacity. Okay, 2005. If we hit 6,000, I tell you, we're going to have another 2 more weeks of MCO. Okay. I don't think this is really unlikely. Now, even they talk about, a lot of the analysts out there usually overestimate. They even estimate there'll be 1 million people will be infected. Right now, we're about 340,000. So we can go 3 more times, which is possible depending on, because the difference between the Chinese, okay, which are right, China, okay, versus the EU, and EU favor freedom, okay? And China, in a way, is what we call regime, okay, because they're communists, right? And Malaysia, where do Malaysia fall? What do you all think, right? Where they can follow order, okay? And that's what China early on, you can see the last slide, this is where China is, right? They did very well. They climb up to about 80 over 1,000 and then they dip back up. But where do you think Malaysia is? Okay. So where do you think Malaysia is? So this is very important. We have the dip below here, right? Just now we have 3,000 over, and I will talk about China, okay, versus EU. Now EU goes a lot for freedom, okay, and China is very regime and they actually follow order. Now where do you think Malaysia falls? All right, that's always been the case. Where do Malaysia falls? And many times it always depends where you go out. When you go out, you see a lot of people. It's in between freedom and regime. Now just go outside of your parks that you see. My small parks in front of my house, I still do people running and jogging, and they're not really following the MCO. So we are somewhere in between regime and freedom. My best take is we hit 2005 because now it's 1,006, we're going 1,000 and a mortality rate of 2%. So we got 2005, 2%, we are talking about 500 deaths. Am I correct? So let's say 2005, 2%. Yep, we're talking about 50 deaths. It's not, sorry, not 500. 50 deaths. Right now we are 15. Okay, so we can go to 50. So these are the things and the control that, because why is important? If, right, we get to this worst case, then we'll be stuck for more than 2 more weeks of MCO. And then the economic will take another 2 weeks of battling because people are not going out to do buying. They're not going out to move the economy. And also, I'm going to talk about US after this too. All right. So any question you have so far, do let me know. Yeah, we are in a middle age regime. Yeah, okay, great. Right. So this is very important why we look at the things for what we are. Okay, let's know that. So what's happening right now in the US market? In the US market, okay, this is where you have the Democrat, okay, versus Trump, okay, which is he's from the Republican, okay, Republican. So right now, there was a bit of stall and a bit of drama because Nancy Pelosi is trying to stall Donald Trump. He said, hey, you want the money, right? 2.5 trillion, you got to give me some deals. And that's where Trump and Nancy Pelosi been fighting. But the US did make a good point, and which is Trump make a US economy is not made to shut down. Although UK have shut down, US are not shut down, but the cities, right? I think California, New York, Massachusetts are shut down too. So yeah, taking a real big hit. And what they're doing, they're going to throw in what we see, like we see it here, is helicopter money. Okay, they're already doing that in let me see, in US. Yes, they're going to give $1,000 US to everybody. They are doing in Hong Kong, 10,000 Hong Kong dollars. So you can see this is what we call helicopter money. You know, it's like, you know, guy flying in and really throwing all the helicopter money inside. So that is why last night you see this almost 2,500 points shot up in the Dow Jones that we have. I'm going to go to the Dow Jones up there. This 2,500 points shooting up out there. That's too fast, too quick, because a lot of this are actually due to short covering, where people shorted, and when you see a sign like 2.5 million trillion, they shorted. But do take note, 90% or 80% of the so-called volume are generated by algo trading. That's what when the market did, it really sell off very, very fast. And then when the market recovered, it went back up very, very fast. This is a lot due to a lot of algo trading. We didn't have that kind of big movement in 2008, definitely not in the 2003 SARS. So all this really, this kind of big selling is caused by algo trading. And do take note of this. This is what really causing why the market is. Now, of course, being an investor, we all like to wear this head of Warren Buffett. Do we look for undervalued shares? Do we look for dividend buying shares? What happens if the recovery takes that long? So the question is, are you ready to buy on dips? So are you putting on a trader head, or you're putting on a Warren Buffett head? Now, I did a survey across Malaysia, right? What do you think most people are? Right? Let me know. Are they a value investor? Are they a trader? Or are they a speculator? What do you think most people are? All right, being what they usually see this. Anybody? Okay, just let me know. Okay, most people, like it or not, are really value investor because the financial literacy in Malaysia is so low, especially the new gen, the new millennium. Many of them are burdened by expenses and so much happening in the internet, or they have invested in Bitcoin. You know, Bitcoin now is, I think, below 5,000, isn't it? Right? At one time was 19,000. It's already kaboom. No one really talk about Bitcoin anymore. Isn't it? So, as I said before, Bitcoin is something that, you know, even Warren Buffett doesn't want to go into it, but he always said for looking for undervalued and dividend paying shares, which I'm going to touch on next. All right. So, question. Many of you are going to be asking me, Martin, after you've been telling me for the last half an hour, are we close to the bottom to start buying? Am I correct? Isn't it? Right. So this is the question that many of you will ask. All right. So I'm not going to give you the answer straight, right? Usually some of my members in the TradeVSA will send me some money. I'll give them a hint, and just like I'll give you some hint. Very important is get ready the list of shares that you have, and I'm going to give you some clues to where to get around it, okay? So before we do that, let's look at the history of the bull and the bear that we have so far. This is one of the posting that I done a couple of days ago, and you can dig it up from the Facebook. So do follow me right at the bottom there at tradevsa.com or fb.com/Martin Teo. Please click like. I really appreciate click like and join at our TradeVSA trading idea in there. All right. If you have any question that you really want to ask, that's a WhatsApp number right below there, 010-266-971. Now, if you look at this history of bull and bear, right, take notice of the COVID-19, which we have here, right? And then the next is the last so-called bear market. You can see this is a bear market, minus 19% and minus 33% here. Okay, the minus 93% was one of the shortest, 3.3 months, 2.9. One of the reasons why I say so, because this is actually a government-induced recession. Okay, what do I mean by that? By government-induced recession, you heard this thing before in Bloomberg and also on CNN. It's because the government forced the MCO on everybody else. The government forced the MCO, but it was not induced, not like a bad loan that we have in the GLC or what we have the toxic loans, all right, the CDO, the collateral debt obligations, which causes the whole thing back in 2007 where the market fell. You can see up here, minus 57%, and that was almost 17 months. Okay, so this kind of month give you a good bet. So we have 2.9 months for recovery, and then we have 3.3 months. So these are what we call government-induced recession, and if government pour back in, okay, government pour back in the stimulus, don't worry about where they get it, they're going to print more money, okay, which is not going to be a problem. Why? Because every government is printing inside there. It's just likely, that is why I say for our Malaysian investor, it's good to move some of your portfolio over. So if you look at the recovery, okay, recovery period here, you have 2.9 months and 3.3 months. Let's look at the other period. Okay, how long this bear market's going to last, because it's very important. It started 0.7. 2009, we didn't have what we call toxic asset, a toxic CDO. So that's why this one took them long. It took almost 17 months. Okay, so you have it's important to look at the history, because the history gives us some sort of indication where we're going forward. So we got 2.9 months, 3.3 months. What are the others? 20 months. All right, we have to take it away from 2000 onwards, okay, because this is where the modern history is. This is where the US central banks, right, started, okay, QE, right. Beyond the 1990s, and below in here, those are not quite relevant because the US Central Bank don't have so much power compared way back from 2000 onwards in here. So if you look at all the recession period that we have, okay, they're relatively short, less than 6 months. So in short, what we do see, the recovery period here, right, is less than 6 months. So this is the best case scenario, what I'm trying to paint to you. Right now, we are at March. Okay, so give and take, let's say we get another 3 more months, okay, plus another 3 more months. So the market should start to move back up somewhere September, okay, earliest for the US market, okay, 2020. Make sense? So what do you think? If you think what I've just said makes sense, just type makes sense. September, just type September 2020. Because I'm going to show you another picture. It's very important that I paint the picture to you based on facts, so you're able to make the judgment out yourself, knowing how the market react to all this. Because this is where we really want to look at things go from here. Okay? Just type September 2020 and please click like and share in your group. Okay, let's go to the next point. Now, let's look at after we've seen the US market, let's turn our attention to our four major crash from 2008, because we really want to look at from year 2000 onward, where the last 12 years or 12, 13 years, Malaysia makes a lot of sense. The first one, just not in any logical order, you could see we have the emerging market correction 2005, right? And then we have the 2008, 2009 global financial crisis, this one here. Then we have, of course, who would not forget, the 2018 Pakatan Harapan and Perikatan national issue. They were only there for 22 months. The Pakatan Harapan, 22 months. And then just this February, Pakatan Harapan, you can see this was the date. But this part here, number 4, okay, which is the 4, is the 2020 COVID-19 crash. So we're going to look at all is dead, because we've seen how the market recover, except since 2018 Pakatan we haven't really recovered, but other markets have recovered. So this is inherently a very interesting issue for our Malaysian market in here. Now let's look. This is a very important. You can take picture of it. How far we recover and how it looked like the bottom of the KLSC. Okay. Now if you look at the bottom of KLSC, number 1. All right, we've seen number 1 here. Okay, this is the first one we're going to look at. This one here, okay. Yeah, actually I have it here. We've seen the 21%, okay, 21%. Let me just bring it up here. 21%, all right, was our drawdown. It took 9 months to get there. Took 9 months to get there, okay. So this is why the inherent problem, a structural problem, where the market, just like what I'm trying to say, unlike the normal COVID-19, if someone got high blood pressure, okay, or they have diabetic, if they don't take care of health, his health will slowly die. It will take years, perhaps months. And that's the same thing in 2015. We saw the emerging market correction. I call it emerging market correction because the market was bound to go higher, and it did way back to just before the election of GE14. So it took 9 months to get to the bottom. And then how long it took to take back? 16 weeks. Okay, 16 weeks it came back, because this is the period where I tell people, don't be so kinchong to go and buy at the market. Time yourself. You know how many months. We just talk about that. So if you really want to go back, do listen to this video a few weeks later and see what I say makes sense or not. Or take picture of this. This is important so you can keep track, and do share this this pictorial with your friend, what I think. Then we have the 2008, okay? Then the 2008 and 2009, I'm going to show you the chart, but I want to show you the numbers first. It took 10 months, okay? We went down by 47, okay? 10 months right at the bottom, and we took 6 months to rebound back. And again, this was a real inherent problem. This was what we call greed policies. People just got greedy. People got into speculation of the property, and that whole damn thing just bust, right? And it took 6 months to rebound back. Okay, so a lot of people say, oh, recession coming. I got so worried. The last time I remember recession, it took 4 years to recover. No, ladies and gentlemen, it doesn't take 4 years. It takes very short. Just now, let me go back to the notes I just shared with you. This one here, we say something less than 6 months. All right, I'm going to present you some models inside here. So now let's go on to the third one. Okay, third one is where we have the Pakatan Harapan and COVID. So what I did was I separated them as two different issues in here. So the first one, Pakatan Harapan, together with COVID, it went down 38%. But take a look at it. 23% came from the COVID-19, and it took 4 weeks. I believe we hit the bottom. 4 weeks. So all in all, it actually went down by 38%. Okay, it took 22 months, right? From May 2018, okay? because of the GE14, and the market just keep dropping and dropping, almost 38%, 22 months into the right. Now, how long would it take? That's for me and for you to see. But what I do have presented you the facts, I think you can pretty much make a recession. Then number 4 was the fastest. When the US market tumbled in the early March, right after the COVID sort of spread, and I think everything all started with the Princess Dream, one of the cruise ship, where it was stuck in Japan, and then they allowed the people to go back, right? And then all of a sudden we have a massive pandemic all over the world, and everybody infected, just like what we talk about. Okay, I think that was when early March in here. It took only 4 weeks right at the bottom, right? So the market will sell off very fast, but when it recover back, it will recover back very, very fast too. So don't just sell the stock. So if you have your stocks, don't worry about it. Keep it first. Make sure they're good dividend shares, and look at Smart Robie. I think the premium alert has a couple of good shares to coming in. So let's look at the crash for the first one. Now this is the first number 1 here. We have this one. So let's look at this one here. This is the 2015 where the market went down here. So we're just going to break it down at the charts. You can see market went down minus 21% in here all the way back. But it took 9 weeks. Okay, 9 weeks, and we are up to here rebound, right? So this is how fast it came down. It took how many months? It took 9 months. 9 months to the bottom, and then first rebound to the top was 9 weeks. And how much did it go up? Plus 15%. Okay, plus 15%. Right now it's already in the past of partly on the process of we hit the low was, I think we're going to look at the KLCR after this. Okay, then we go on to the second one, which is the great one, global financial crisis. Okay, GFC. The global financial crisis was 2008 and 2009. GFC was this one here, right? You can see how bad did we go? Yes, it took minus 47.4%, right? And it took how many months? Let's go back to the GFC, which I've showed 10 months. Okay, 10 months to the bottom. And how far did we take? 6 months to rebound back. Now, this is important what we talk about, the government induced recession, okay, versus what we call a policy induced recession. Because in here was caused by the GFC, global financial crisis, right? This was caused by MCO, okay, where we have the partial shutdown. So one is really man-made, where the government can just put in stimulus. And I think you all heard this morning too, there will be a second or maybe third economic stimulus coming in, because people are worried, right? People are worried they can't make money. They can't withdraw money. They are not enough to pay expenses. Especially those of you who are listening are retiree. You can understand why it is so difficult right now, why it took so long for this market to rebound back. So it took 6 months to rebound back. And then the third one, which is this Pakatan here, right? I'm going to show you, right? The Pakatan. You can see this Pakatan, the rebound that we see, this is right now, okay? So the PH and PM, a lot of wrestle COVID. How long it will take? Here, right? And how far is it going to move back up? That's the question mark, okay? And the same goes for this one here. This is where we are. Yesterday, when I did this slide, from the COVID, we are down almost 23%, okay? To be precise, 22.8. You can see right now, we are already back almost, okay? This part, 1001 to 1003, we're almost up 10% already from the base here, right? And every day it goes up 2 or 3% inside here. So it will quickly hit up here, and then very likely the market will bounce. This is where I want to talk about the next model, which I call the Love Stock Market Recovery Model, okay? So just bear with me. Now, let's look at a little bit of summary, what we see from volume spread analysis readiness, market bottom summary, okay? We have seen climatic action, right? Reason is because we see a lot of volume coming in here, All right. So we do think from a standpoint of volume. That's why we always tell people, learn about price and volume. Learn to use price and volume. When people just talk about all this technical analysis, they don't just look at moving average. If you don't use that volume, it doesn't make sense. Some of the best movie, can you imagine Avatar? All right. And this year's Star Wars, you turn off the volume. You just see those guys, okay? No subtitle. Would you understand? No, really. Right? So what we have seen the climatic action, right, on the left-hand side. And then the faster it falls, the quicker of the rebound, which also we show you in here. If you take 9 months, right, it will take longer to recover. If it falls faster, it will rebound faster. And then it's very easy to expect, third one, 10 to 15% easily with the market rebound, right? So far, we are very close to the bottom, right? I don't want to say I'm the bottom because we at VSA, we cannot time the bottom in here. And next is the part I will explain more is the love market recovery model for the forecasting. This is where I will talk a bit more about here, okay? So this is another one, just take photo of this, and this is what I based on my assessment in here. Very important how fast our market will recover. Now we have the L shape, okay? L shape means the market generally goes like this. Market fall, and then, we go into a period of long recession, right? It will take 16 to 18 months. This is the one that very, very painful, okay? This is the one very, very painful, and it's going to be based on the, what we call flatten the curve. So what I'm trying to do really to piece in the early information that I give to you about the MCO number of that and something that JP Morgan was talking about, right? And we can see the market dip, okay? The sell-off, how bad was this, right? Minus 45%, all right? Right now, for the KLCI, we are about what? 38%, okay? 38% from the market top here. Right, so you can sort of give you a general idea where we are, and the probability of this happening, in my assessment, about 20%, because this has to be policies, okay, which they did not control, not so much government-induced policy, right? And the recovery period will take 1.5 years, right? Then there is another one called the U shape. The market recover very fast, and this is the one that we actually teach a lot in VSA, okay? And this is like stage 1, sorry, this is stage 4, this is stage 1, and this is stage 2. Okay, I think you'll know what I'm talking about for those members, stage 1 accumulation, stage 2. So that's why it's important for you to understand where the base is. For many of our members who went through our education and using our TradeVSA, they understand this. That's why we talk about financial literacy. It's very important, especially going by the numbers are so low. And this is the one that being a bit more average, we're taking about 9 to 12 months. So where we are. So let's say now in March, okay, 9 months will be year end. We'll get out of this. Okay, and the market dip around here. This is minus 25 to 40. Right now we are at 38%. Okay, and then the probability of this happening most of the time is this one. This one is short pain. Okay. Right now, this is where, the government coming in with a lot of stimulus 1, stimulus 2, and yet people no job. Remember the moratorium that was done by the Bank Negara where you can delay your payment. So that's what we call short pay. You still have to pay your bank loan, but you cannot tabot. Am I correct or not? Right? Okay, good. Well done today, guys. Any more? So if the information I'm giving you are good, give me a thumbs up. I really appreciate them. Okay. And do let me know anything else you guys want to know and want to understand, what's happening to the economy in there. When it comes to stock pick, I will give you some tips and where you can get more information in there, and definitely. But it's very important for me to explain the overall market recovery, that you don't panic, you see things differently, and you get this information, very valuable information based on my experience over the last recession, 2008 and 2009, the last what I would call it, my 17 years or 18 years in the market, to share with you in here, to tell you, look, we are in this together. We have a short pain. We will get out of this together. But you need to do certain things correctly. First, invest in education. Okay? Learn yourself. You owe it to your family to know this kind of information, that you don't panic. Okay? Now let's go on to the third one, what I call the love model, is a V recovery. Now V recovery tend to be a correction kind of mode. They sell off, they come back, and we saw that in 2015, right? The period of recovery will be less than 6 to 9 months, and the sell-off percentage generally is about less than 25%, and this happened quite often, 35% of the time. This for this round, anyway, I'm talking about this round. Okay, this round, right, it's going to be 30. This is the one that we have also shorter pain. Okay, shorter pain, and here. I don't believe we have a correction mode where the market recovers. So you can see today, you look at 3% return. The market sort of, step right in. Let me just show you where we are. Okay. Yeah, this is the one. This is where people thought, market hits here and straight back up. That's what, if it does, it's actually a V recovery. So the probably happening this time is only, in my opinion, is 35%. It's not going to usually do that, right? What I do think, the best case scenario is going to be a U-shaped recovery. If a U-shaped recovery, then the market is sustainable, right? One reason why it allows people to pick up, allow people to get rid of it. But the V correction, that's the one where people jump in right now to buy, and the market will have another chance to correct itself too. So look for the U recovery, all right? And it will take somewhere between 9 to 12 months. Okay. Now, going back from this, what I've talked about, the number of months, also support the history of the bull and the bear, right? Which is take about 3 months, which I explained on. And this COVID-19 will be all over. We know that, for a fact that some people say this will last to end of years. Yes, the whole system recover will last to the end of years, but the disease will peak, right? If you follow any truth from it, if it peak in mid-April, right, and hopefully for our Malaysian numbers, we don't hit 5,000 like you saw earlier by the so-called JP Morgan. If you hit 5,000 on mortality rate of 2%, then you're talking about 100 old people dying, okay, which could be possible. So very important, the good indication how soon we get out from this partial lockdown. The MCO will be a lot based on what we see on the control. So people, all right, do us a favor, tell your neighbors, stay at home. And I think it's quite true. If you want to save the country, save the economy, stay at home. All of us have to do the part. Now remember what we're seeing in Italy, where they value freedom, right? Compared to the Chinese, we are more disciplined, they're more regimented. You see where the Chinese is. And now even people, talking, you see, the Masale, the Western people always say how good they are. They were laughing at the Chinese way back before Chinese. You see, they locked themselves out. But look at them, the Western now. They didn't lock themselves out and people are dying. It's so sad. When I read some of those coronavirus daily, I heard about this Italian guy in northern Italy where he, father was well, but the father could not stay at home. He has to go out and talk to his friends, have an afternoon coffee or whatever. And then 5 days later, he's already gone. He's about 72 years old. So those things is important. If you have a elderly person at home, make sure he doesn't go out. Just like my mom, I put her at a very safe place, and we keep the distance away from her too. It's very important for that one to keep the elderly. I know last Sunday was also Mother's Day, and then UK went through this whole process of, stay away from your mom. Okay, more about that. Okay, so this is where what are the experts are looking now. In Goldman Sachs, I think some of you may have seen this. They are forecasting a V-shaped recovery. In my opinion, a V-shaped recovery, it's very dangerous. It doesn't give you time to accumulate. Some of those members who know what I'm talking about, the stage 4 sell-off, the stage 1 accumulation, that's big. Because when you kind of a V-shaped recovery, you don't have time for the thing to recover, and you'll fall back very fast. So on Goldman Sachs, they talk about a sell-off, okay, to minus 68. This is from the high right to the bottom here. This is a minus, okay, 68% sell-off. And then this market moved back up, about, currently we are at 2448. Actually, we are here. It didn't even go. This was March 16. This is March 25th, okay. So this report was only about, 9 days ago. It didn't go that low. It was somewhere here. And then the market rebound back. So why he's saying can go down to 2,000, don't forget, a lot of analysts tend to overestimate. Just like some analysts estimated the virus that we see will exceed 1 million. Right now it's about 340,000. Will we get to 1 million? Probably not. We have to see the slowdown. And Malaysia cases has slowed down. It's just that some other country has not picked up yet. So you can see right now we are at 244. Going back to 3,002 is 31% in here. There is a recovery, ladies and gentlemen. We just don't know whether it is V-shaped or U-shaped. Hopefully not an L-shape, because L-shape, we are going for a long recession in here. So what are the things that you should do is rethink back how you should approach investing, which I talk about: diversify outside of Malaysia, diversify to a non-Malaysian investment portfolio, hedge your portfolio using some sort of put and call war, and use the system to trade with an edge, just like how we do it at TradeVSA. We have our buy and sell signal on our charts by our Pentagon, and that way you can do so. Okay, so with so many stocks, what do you buy now? Now, looking at the top-down investment approach, this is where we will actually teach some of our members in here how to look at it, right? So we want to look at where the economy is. To be frank with you, I don't see we're going to get out from our country. Now they are forecasting a 2% GDP growth, because a -2 from where we are, 4%. And the same also go for US country out from there. But very important, what is happening this year, US, we have the election campaign for Donald Trump. Should he get elected, or is going to base on what he does now from March all the way to November 3rd. So the event risk and market decision. So generally you will know how to invest looking at the sector. So what we do in TradeVSA, we use the smart Robie to give us the buy and sell signal using our Pentagon. You can see this Pentagon over here. Let me just draw here. This is the part that we tell our members, the beginner one. When do you buy? When you see the green Pentagon. And when you get install the apps using Telegram, you can see the KLCI here. Click that one, you should be able to see this chart in here. This is still free for the limited time, so install us and do give us a feedback too. Okay, and also go to our Facebook. You can see right below there, Facebook Smart Robie, looking for undervalued stock idea and stock insight. This is the one that we talk about, and here you could see Guangchong giving a rating of a 5, and Supermax, which I think overpriced and so. So these are the one that we share with them, and this is completely free, by the way, ladies and gentlemen. So you can see some of those ideas that you have, and do join our TradeVSA and our phone number there, where you can get more information, and if you want to, just ask us a question too, also that. Now, in our premium screener package, if you do join us on our TradeVSA in here, we have also looking at the technology share, where we talk about the rebound, right? We talk a lot about the rebound. What are the shares that you can buy? Okay, so you can see in here, just looking at technology sector and FADDO. FADDO is dividend shares. Value shares from undervalued to fair price value, and they pay dividend. You can see MPI, Unisem, Union. So together with the shares list, this share list, plus our Pentagon, okay, buy and sell, we're able to time good entry for quality shares. Okay, so our ways of approaching the market is very, very simple. Okay, very simple. We know what share we want. We know the sector, just like I shared with you earlier. We're looking at economics. We don't do a bottom up, we do a top down, because the sector, now remember, even this year, the KLCI, a lot of them has done very badly, but we all know technology done well. So this is just a simplistic way of looking at the market. And if you do join us in our screener package, we'll teach you how to do that. All right. So also subscribe to our Robie free report, all right, those of you who have. And you can take a picture of the QR code on the left hand side, or just go over to facebook.com/smartrobie in here. Click on use the apps and download it. Right, so this is the one that you can subscribe to our existing subscriber, so you can see all these news market report that we send to you email daily at 4 p.m. I think. Okay, for today one, my team is yet to do that because I was preparing for this one, so do that too. And one of the strategies we do think going forward, there'll be lots of market volatility. So we teach our member using our VSI. That's the one you can follow us, how I trade the futures. And the goal is very simple, ladies and gentlemen. We try to make 6 to 10% return daily using CPO. So if you've been affected by COVID-19, pay cut or job loss, learn how to trade. And this is the one that you can trade from home or you can trade from your office. We give you a second income. It's very simple. Just like I said, we have a buy and sell signal in there. We have our support and you get through. So, and this is one of our members and share with you. He's just made about, this is only a 1 day profit, a very good profit actually. 1,675, and if I look at that, 1,675. Okay, that's almost a 30% profit within a day because the capital outlay is very, very small. And we keep this small so you're able to do it. You don't need to watch the screen because one member said, hey, do I have to stay in front and watch the screen whole day? You don't have to, right? You have a particular time to trade and most of the trade will last about 20 minutes, some about 6 minutes and you're off. All right, so just keep calm and just do it. All right, so this is the RMO restricted movement or CMO, whatever we call it, from the 18th and 31st. Right now, we are on Wednesday here. Okay, Wednesday. Okay, and this afternoon, my fellow colleague, Coach Arif, will bring you through from 2 o'clock to do the FCPO trading. Okay, to do the FCPO trading. So he's going to share with you in there how he does it. And we're going to go in and see what are the things that he will share. He's going to present to you what is FCPO is all about. And perhaps you can learn something how to look at our system and trade and try to make the 6 to 10%. And then tomorrow, we will have also our stocks. And then I'll be back on Friday to trade live FCPO. And my trainer, Zach, will be here at 4 p.m. It's just that every Wednesday, we do a special session to keep you informed of the major decision, what's happening in the market and you do for, okay? All right, so don't miss any of the update. Join our TradeVSA Telegram group in here. Take a picture of this at t.m TradeVSA Trading Idea over here, right? And also subscribe to our YouTube, all right? So I am at the last portion of my presentation in here. So if you have any questions, do let us know. So if you have a certain stock you want me to look at it, we're not going to do in this session in here. You can send it to send it to Robie because Robie have a fundamental. It has a rating. It also has a buy and sell signal in here. But if you can do so, go over to feedback.com. Go over to fb.com@smartrobie and give us a feedback.